Preparing for a finance manager at SSE interview? You've reached Candy Mentor, and this video is for you. We'll walk through 25 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to become a finance manager at SSE? I want to join SSE because finance can directly support the transition to a cleaner, more secure energy system. The role combines strong financial control with investment appraisal, performance management, and stakeholder communication. I would bring disciplined reporting, practical business partnering, and experience developing teams. SSE's scale and infrastructure focus are particularly attractive because decisions have long-term consequences for customers, investors, and communities. I see the position as an opportunity to improve performance while supporting responsible growth. While answering, focus on SSE's energy transition, the finance function's commercial influence, your leadership motivation, relevant sector experience, and how your values align with safety, sustainability, integrity, and long-term stakeholder value. Question 2. What do you understand about SSE's business and its key financial drivers? SSE operates across energy generation, renewables, electricity networks, and related customer activities. Its financial drivers therefore include wholesale power prices, generation volumes, network regulation, inflation, interest rates, project construction costs, and operating efficiency. The business is capital intensive, so cash generation, financing capacity, and disciplined investment are crucial. I would also distinguish regulated earnings from merchant exposure, because each requires different forecasting assumptions, controls, and performance measures. That understanding would shape both reporting and decision support. Make sure to cover SSE's generation, renewables, networks, energy supply activities, capital intensity, regulated returns, wholesale prices, project delivery, operating costs, funding requirements, and the differing risk profiles across business areas. Question 3. How would you ensure accurate and timely month-end reporting? I would begin with a clear close calendar assigning owners, deadlines, dependencies, and review points. Key controls would include bank and balance sheet reconciliations, validated accruals, analytical review, intercompany confirmations, and documented journal approvals. I would focus early on judgmental areas such as provisions, project costs, and revenue cutoff. After the close, I would investigate recurring adjustments and redesign weak processes. Timeliness matters, but I would never improve speed by weakening evidence or review quality. In your answer, talk about a documented close timetable, ownership, reconciliations, materiality thresholds, accruals, review controls, variance analysis, system discipline, escalation procedures, and continuous improvement after each reporting cycle. Question 4. How do you approach budgeting and forecasting in a volatile energy market? I use a driver-based forecast rather than simply rolling forward last year's numbers. For SSE, I would model generation volumes, achieved prices, availability, regulation, inflation, staffing, CapEx, and financing costs, then test them through base, downside, and upside scenarios. I would involve operational owners so assumptions are realistic and challenged. Forecasts should be refreshed when market conditions change, with a clear bridge explaining movements. That gives leadership both a number and a practical decision framework. Be sure to mention driver-based modeling, scenarios, sensitivities, market assumptions, operational inputs, stakeholder ownership, forecast cadence, downside planning, and transparent communication of uncertainty rather than false precision. Question 5. Tell me about a time you improved a finance process. In a previous role, the monthly accrual process relied on disconnected spreadsheets and produced repeated late adjustments. I mapped the process, identified duplicate approvals, and worked with operations to create a standard template linked to purchase orders and project status. We introduced owner sign-offs and exception reporting. The close shortened by 2 days, while post-close corrections fell materially. I also documented the process and trained the team, because a control improvement is only effective when it survives staff changes. While answering, focus on the original inefficiency, your diagnosis, stakeholder involvement, technology or control solution, measurable outcome, implementation risks, and how you ensured the improvement remained sustainable after launch. Question 6. How would you manage a team through a demanding reporting deadline? I would translate the deadline into a visible plan, allocate work according to capability, and identify critical path tasks early. During the close, brief daily check-ins would surface blockers without creating unnecessary meetings. I would remain available for judgment calls, but avoid becoming the bottleneck by empowering experienced team members. If pressure became excessive, I would escalate capacity risks early. Afterwards, I would recognize the team's effort and review lessons learned, balancing performance expectations with sustainable working practices. Make sure to cover planning, workload prioritization, role clarity, psychological safety, daily communication, escalation, quality checks, recognition, and post-deadline reflection to protect both delivery standards and team well-being. Question 7. What financial controls are most important in a large energy business? The most important controls protect completeness, accuracy, authorization, and safeguarding of assets. I would prioritize segregation of duties, system access reviews, journal approval, balance sheet reconciliations, procurement controls, revenue completeness, and fixed asset governance. For large energy projects, commitment reporting, forecast at completion reviews, change orders, and impairment indicators are also critical. I would distinguish preventive and detective controls, monitor exceptions, and ensure evidence is audit-ready. Strong controls should support reliable decisions, not merely satisfy compliance requirements. In your answer, talk about segregation of duties, journal controls, access management, reconciliations, procurement to pay, revenue completeness, asset registers, project controls, estimates, compliance evidence, and monitoring of control exceptions. Question 8. How would you investigate a significant budget variance? I would first confirm that the variance is genuine and not caused by coding, timing, or data issues. Then I would decompose it into volume, price, mix, efficiency, foreign exchange, timing, and one-off effects. I would discuss the drivers with operational owners and assess whether they affect the full-year forecast. My report would explain the commercial cause, financial impact, risk, and recommended action. The objective is not to assign blame, it is to improve decisions and accountability. Be sure to mention validating the data, decomposing price volume mix and timing effects, distinguishing one-off from recurring items, speaking with operational owners, assessing forecast implications, and agreeing corrective action with clear accountability. Question 9. What is your approach to cash flow forecasting and working capital management? I would maintain a short-term 13-week cash forecast alongside a longer-term liquidity model. The forecast should capture customer receipts, supplier payments, payroll, tax, CapEx, debt service, collateral, and significant project milestones. I would reconcile forecast to actual cash movements and investigate recurring variances. Scenario analysis is essential in an energy business because prices and collateral requirements can move quickly. Close coordination with Treasury and operations would help protect liquidity while avoiding unnecessary cash buffers. While answering, focus on receipts, supplier payments, payroll, tax, CapEx, debt service, collateral, commodity exposures, forecast horizons, scenario analysis, liquidity headroom, and collaboration with Treasury and operational teams. Question 10. How would you evaluate a proposed renewable energy investment? I would assess both strategic rationale and financial returns. The model would include development and construction costs, grid connection, operating availability, generation volumes, power price assumptions, inflation, operating costs, tax, financing, and decommissioning. I would calculate NPV and IRR, but focus heavily on sensitivities and downside cases, including delays, cost overruns, lower output, and weaker prices. I would also test contractual protections and regulatory assumptions. A strong investment case should remain understandable when key variables move unfavorably. In your answer, cover strategic fit, discounted cash flow, IRR, NPV, sensitivities, power price assumptions, construction risk, operating availability, grid connection, funding, regulation, optionality, and downside protection. Question 11. What are the main accounting challenges in capital-intensive infrastructure projects? The main challenges are distinguishing capital expenditure from operating costs, tracking construction in progress, determining when assets are available for use, and establishing appropriate components and useful lives. I would also consider borrowing cost capitalization, impairment indicators, decommissioning provisions, contract variations, and commitments. Project accounting needs close coordination with engineering and procurement teams because finance rarely owns all the underlying facts. I would require clear evidence for judgments and ensure asset records and depreciation begin at the correct date. Make sure to cover capitalization criteria, componentization, construction in progress, borrowing costs, impairment, useful lives, commissioning, decommissioning obligations, contract changes, estimates, and the importance of robust project documentation. Question 12. How would you assess whether an asset requires impairment? I would start by identifying indicators such as weaker prices, lower generation, cost overruns, regulatory changes, project delays, or a sustained decline in market value. I would then determine the relevant cash-generating unit and compare carrying value with recoverable amount, using value in use or fair value less disposal costs. Forecasts, discount rates, terminal assumptions, and sensitivities require rigorous challenge. I would document the evidence, involve technical specialists where needed, and communicate judgment clearly to auditors and management. Be sure to mention impairment indicators, cash-generating units, recoverable amount, value in use, fair value less costs of disposal, forecasts, discount rates, terminal assumptions, sensitivities, and disclosure of material judgments. Question 13. How do international financial reporting standards requirements affect your role as a finance manager? International financial reporting standards affects more than the final set of accounts. It shapes decisions, controls, forecasts, and stakeholder communication. I would ensure transactions are assessed against relevant standards, judgments are documented, and accounting policies are applied consistently. In an energy business, areas such as leases, provisions, financial instruments, revenue, impairment, and property, plant, and equipment may require significant analysis. I would involve auditors early on complex matters and explain conclusions in plain language so commercial teams understand the consequences. In your answer, discuss applying standards to transactions, documenting judgments, monitoring changes, controlling close processes, engaging auditors, training stakeholders, and translating technical accounting into commercially useful guidance. Question 14. How would you work with external auditors during year-end? I would aim to make the audit predictable by agreeing the timetable, information requests, owners, and significant risk areas early. Technical papers should explain the issue, accounting conclusion, evidence, alternatives considered, and materiality. I would track requests centrally, resolve misunderstandings quickly, and escalate delays or disagreements with facts. I would welcome challenge while protecting the company's position through robust analysis. After completion, I would convert control findings and audit adjustments into specific process improvements rather than treating them as isolated issues. While answering, focus on preparedness, a clear evidence tracker, early resolution of significant risks, transparent judgment papers, responsive communication, challenge of proposed adjustments, and maintaining an independent but constructive relationship. Question 15. Tell me about a time you challenged a senior stakeholder. A senior manager once wanted to recognize project savings before the supporting contract changes were approved. I explained the accounting and control risk, using the relevant evidence and quantifying the potential impact on reported performance. Rather than simply rejecting the request, I proposed recording the amount only when approval and delivery evidence were complete, with a separate forecast note for management. The stakeholder accepted the approach. I learned that respectful challenge works best when paired with a practical alternative. Make sure to cover the commercial context, evidence used, respectful communication, alternative options, the decision reached, your relationship management, and what the experience taught you about influencing without authority. Question 16. How do you communicate complex financial information to non-finance leaders? I start with the decision or action required, not accounting terminology. For example, instead of leading with an EBITDA variance, I would explain that lower availability reduced output, which lowered earnings and may affect the annual forecast. I use a concise bridge, highlight material assumptions, separate facts from estimates, and explain the operational implication. I then invite questions and confirm ownership of next steps. Good communication makes financial information useful, not merely accurate. In your answer, mention starting with the decision required, using plain language, focusing on material drivers, visualizing trends, separating facts from assumptions, explaining implications, and checking understanding without overwhelming the audience. Question 17. What KPIs would you use to monitor SSE business performance? I would use a balanced scorecard reflecting both financial and operational performance. Measures could include EBITDA, operating cash flow, cash conversion, CapEx versus plan, project cost and schedule, generation output, asset availability, achieved prices, and return on invested capital. For regulated activities, I would include delivery against allowed investment and service metrics. Safety, customer outcomes, and carbon-related measures are also important leading indicators. KPIs should explain performance and trigger action, rather than become a long list of statistics. Be sure to mention selecting KPIs by business model, including EBITDA, cash conversion, CapEx delivery, project returns, generation output, availability, safety, customer measures, regulated performance, and leading indicators. Question 18. How would you manage competing priorities from the CFO, operational leaders, and auditors? I would clarify each request's purpose, deadline, risk, and required level of detail, then map dependencies against existing commitments. Statutory, regulatory, control, and liquidity obligations would receive appropriate protection, while lower value analysis could be deferred or simplified. I would communicate trade-offs early rather than quietly miss deadlines. Where priorities conflict, I would present options and seek an explicit decision from the relevant leader. This approach keeps the team focused and makes capacity constraints visible. While answering, focus on clarifying urgency and impact, mapping deadlines and dependencies, agreeing trade-offs, protecting regulatory and control obligations, communicating capacity constraints, and revisiting priorities as new information emerges. Question 19. Describe your experience with financial systems and data quality. I have worked with ERP systems, consolidation tools, reporting platforms, and spreadsheet models, but I treat system output as evidence to validate rather than unquestionable truth. I would review chart of accounts design, master data, interfaces, access rights, and reconciliation controls. For new reporting, I test source to report completeness, agree definitions, and document ownership. Automation can remove manual effort, but only when logic is transparent and exceptions are monitored. Reliable data is a prerequisite for credible management information. In your answer, discuss ERP and reporting tools, chart of accounts governance, reconciliations, master data, interfaces, access controls, automation, data ownership, and how you validate outputs before relying on them. Question 20. How would you manage finance risks associated with energy price volatility? I would first understand where the business is exposed through generation, procurement, customer contracts, and financing arrangements. Finance should monitor the effect of price movements on earnings, cash, collateral, valuations, and covenant headroom, using documented scenarios. I would work within approved hedging and risk policies, ensuring independent valuation, limit monitoring, and clear segregation of duties. The objective is not to predict prices, it is to make exposure visible, test resilience, and escalate breaches promptly. Make sure to cover exposure identification, hedging policy awareness, scenario modeling, valuation controls, collateral and liquidity impacts, governance, segregation of duties, limit monitoring, and clear communication of residual risk. Question 21. Tell me about a time you delivered bad financial news. I once identified that a project forecast had understated contractor costs and would miss its approved budget. I validated the estimate with procurement and the project manager, quantified the impact, and communicated it promptly to the steering committee. I explained the cause without assigning blame, then presented options involving scope, timing, and contingency. Management approved a recovery plan and revised forecast. The experience reinforced that early, evidence-based communication preserves trust better than delaying difficult information. Be sure to mention preparing accurate facts, explaining cause and consequence, communicating promptly, avoiding blame, presenting mitigation options, documenting decisions, and maintaining credibility through transparent follow-up. Question 22. How do you promote an inclusive and high-performing finance culture? I set clear expectations for quality, deadlines, collaboration, and respectful behavior, then create an environment where people can raise concerns early. I would rotate opportunities, encourage quieter voices in meetings, and use regular one-to-ones to understand development needs. Coaching should be specific and timely, with recognition for both results and behaviors. I also monitor workload and well-being because sustained performance requires capacity. Inclusion is not separate from control quality. Diverse challenge often identifies risks sooner. In your answer, cover clear standards, psychological safety, inclusive meetings, coaching, fair development opportunities, constructive challenge, recognition, well-being, diverse perspectives, and accountability for both results and behavior. Question 23. What would you do if you discovered a control failure or potential fraud? I would not investigate informally or alert people unnecessarily. I would preserve relevant evidence, assess whether payments, reporting, or systems remain at immediate risk, and follow SSE's escalation, incident, and whistleblowing procedures. I would notify the appropriate finance leader, internal audit, compliance, or legal contact, maintaining confidentiality throughout. Facts should be established independently before conclusions are drawn. Once resolved, I would address root causes, strengthen controls, and confirm that remediation is tested and completed. While answering, focus on preserving evidence, assessing immediate risk, following whistleblowing and incident procedures, maintaining confidentiality, separating investigation from assumptions, escalating appropriately, and implementing remediation after facts are established. Question 24. What would your priorities be in your first 90 days at SSE? My first month would focus on listening, meeting the team, operational leaders, treasury, tax, commercial, audit, and key stakeholders while understanding SSE's strategy and risk profile. I would then review the close, forecast, control environment, systems, and major projects, distinguishing urgent risks from improvement opportunities. By day 90, I would agree a practical roadmap with measurable priorities, perhaps one quick process win and several structural improvements. I would build credibility through evidence and collaboration, not premature conclusions. Make sure to cover listening, stakeholder mapping, understanding strategy and risks, reviewing close and forecast processes, assessing team capability, identifying quick wins, respecting existing knowledge, and setting measurable improvement priorities. Question 25. Why should SSE hire you for this finance manager role? SSE should hire me because I combine strong financial control with practical commercial judgment and people leadership. I can deliver an accurate close, challenge assumptions constructively, improve processes, and explain financial consequences to operational stakeholders. In previous roles, I have managed competing deadlines, strengthened reporting, and developed team capability while maintaining high standards of integrity. I am also motivated by SSE's role in the energy transition. I would bring dependable execution and a continuous improvement mindset from day one. In your answer, connect technical accounting, commercial insight, leadership, process improvement, stakeholder influence, integrity, adaptability, and energy sector motivation, supporting each claim with concise evidence from your experience. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.